Hi everybody, this is lecture 1 for topic 1, ACT3110. Okay, these are the things that you will learn in this topic. First one is definition of accounting, second one is rules of accounting, and then uses of accounting information, and then financial accounting and management accounting, and the last one is types and forms of business ownership. Okay, this is very important. I think I have told you in the first video or in the first meeting, you have to know the definition of accounting. When you know the definition of accounting, every time you want to do accounting record, you know what to do. Okay, let's see. So this is the definition provided by the textbook. Accounting can be defined as an information system that provides reports to stakeholders about the economic activities and condition of a business. It is the process of identifying, measuring, recording, and communicating economic information to permit informed judgment and decisions by users of the information. So this thing that you have seen is the long definition of accounting. So the simple and straightforward definition of accounting is like this. Accounting is a process to analyze and record financial or business transaction and to report financial information. Okay, remember this. Accounting is a process to analyze and record business transactions and to report financial information. So the first thing that you have to know is accounting is a process. Process means something that a person has to do. And then the second thing is, it is a process to analyze and record business transaction. So you do accounting record for a business. The main purpose of doing that is to know, to keep record and to know whether the business is making profit or loss. So the accounting process is started when a business do a business transaction. If you have a business, you have to do many transactions every day. Your business will sell something, your business pay salary to the workers, your business pay rental, your business purchase inventories from the supplier, your business pay for repair and maintenance, for example. So these things are called business transaction. So the accounting process started after a business transaction happened. Let's say you have a business, today you sell something. After that sales transaction, you have to start the accounting record process. You have to record the sales. And then after that, let's say you pay rental. After you pay the rental, after the transaction, you have to record the transaction. Maybe you purchase equipment. That is a transaction. So you start the recording process. So accounting is a process to analyze and record business transaction and to report financial information. So to report financial information means at the end of every year, in accounting, you have to close your account or you have to close your record. After you close your record, you have to prepare a report. For financial accounting, that report is called financial statement. In that financial statement, you can see whether the business is making profit or loss, and then whether how is the financial condition of the business. Is it a good condition or not a good condition? So that is accounting, a process to analyze and record business transaction, and at the end of the year to report financial information. There are many branches of accounting, like financial accounting, management accounting, forensic accounting. What else? Merger and acquisition accounting, auditing, tax accounting. So these are the types of accounting. In this course, you will learn about the basic for financial accounting and management accounting only. Okay, you will see more about this type of accounting in the next slides. Okay, that is the definition of accounting. And role of accounting. Okay, this is roles or functions of accounting. So if you have a business, it is a good thing to do accounting for your business, to do accounting record for your business. Okay, what are the roles or function of accounting? First, the first role of accounting is it is language of business. Accounting is a language of business. So it means that if you are a businessman and you want to talk with other businessmen about business, you have to use accounting. You will talk about profit, loss, asset, liabilities, equity, expenses, costs, etc. These are accounting. So accounting is a language of business. If you want to talk about business, you have to use accounting. So accounting is a language of business. The second role of accounting is it is a decision-making tool. So if you have a business or you are a manager in a business, you have to make many business decisions almost every day. I think every day you have to make many business decisions. For example, you have to set price for your product. If you produce something, you have to set price for your product. And then and also you have to decide how many units you want to produce, or how many units your business want to sell your product, how many unit, the quantity. And also you have to decide things like how many workers you have to hire, how many whether to purchase inventory or raw material from this supplier or another supplier, or even you want to make your own raw material, for example. So there are many business decisions have to be made every day. So accounting can be used to help business owner and manager to make decision. For example, let's say you have a business and one day you want to decide about how much you want, how much is the price for product A that you produce. So if you want to decide about the price for product A, you can use accounting to help you to make the decision. So the basic thing is, the basic way to set the price is you have to calculate the cost for product A. Let's say the price for product A is $17. So after you know the price, the cost is $17, then you can set the price. Maybe you want to sell the product A at $25 or $30. See, you can make good price decision after you use accounting data. The cost data is accounting data. The way to calculate cost is done using accounting. So accounting is a decision making tool. You use accounting to help you to make business decision. And then number 3 is accounting can be used to create accountability and control. So the thing is like this. In a modern business, most of the time the owner of the business and the manager of the business are different people. Things like, let's say, in Malaysia we have Petronas. The owner of Petronas is a big, I think the biggest company in Malaysia. So Petronas is owned by shareholders. So who manage the company? The person who manage the company is the manager. The manager is called CEO. In your place, maybe the biggest one of the biggest company that we have here is like Alibaba. Alibaba is a big company. It is owned by the shareholder. I think Jack Ma is the shareholder, the biggest shareholder. Now Jack Ma does not manage Alibaba. I think he has hired somebody else to be the CEO of Alibaba. So the thing that you have to understand is the owner of the business. Most of now in many modern businesses, the owner of the business and the manager of the business are different people. So how accounting can be used to create accountability and control? So the thing is like this: if you are the owner of a business, and then you appoint somebody else to manage the business, how to make sure that manager works for you? Works for you because you own the business, so the manager has to work for you. So how to make sure that the manager works for you? One of the simple way to do it is to use accounting. The simple way to do it is like this: you just make a condition to the manager, and something like you say, if the business is making profit, the manager can get a salary increment and also will get bonus. If the business makes loss, and then you will stop the salary increment, and maybe you will terminate the manager. So that is how accounting can be used to create accountability and control. The profit number is an accounting figure. You calculate profit using accounting. So when you use profit and loss to control the manager, so it shows that accounting can be used to create accountability and control. You can use accounting to control the manager. You can use accounting to make sure that the manager is accountable for you and for your business. So number 4, accounting is an information system. Accounting is an information system. A system is something that has input, process, and output. For example, our respiratory system. The input is oxygen. The process is in our lungs. And the output is the carbon dioxide. So it is a system, a respiratory system. We have digestive system. Water and food are the input, and then there is a process inside, and then there are outputs. Okay, so system is something that has input, process, and output. Accounting is also a system. The input of the accounting is the business transaction data. Remember, I have told you the definition of accounting. The process of accounting is started when there is a business transaction. So the input of accounting is the data related to business transaction, and then the process is the recording process. The output is the final report of the accounting. The output is the information produced by the accounting process. So for financial accounting, the output is called financial statement. For management accounting, the output is called budget, and also cost report. So accounting is an information system. In a big business, they have the biggest. They have a system, a big system. It is called management information system or management system. Business management system or business information management information system. Accounting is a small system inside the management information system or management system. So accounting is a subset of management information system. Okay. Okay, uses of accounting information. So I have told you for this course, our focus is on two branches of accounting: financial accounting and management accounting. So like I said earlier, accounting is a process. So there is a process, and then at the end of the year, or at the end of the accounting period, there will be output of this accounting. For financial accounting, the output is called financial statement. For management accounting, the output is called, there are two main outputs. The first one is budget, and the second one is cost report. So who are the people that will use this output? Who are the people that will use the financial statement and also the budget and cost report? Okay, so this subtopic discuss about these users. There are people who will use the financial statement and budget and the cost report. So in accounting, there are two group of users. One group of users is called internal users. Another group of users are called external users. So internal users are people inside the business or organization. External users are people outside the organization. So let's say you work in you have a business, and then you use accounting to do the recording process. You use financial accounting to do the recording process, and you use the financial accounting to calculate profit for your business. So who are the main user, do you think, of financial accounting? Okay, so just remember about this. Later you will understand more about this. For financial accounting, the main user is external user. For management accounting, the main user is internal user. For management accounting. Okay, so we discuss about internal user first. See here, who are the internal user of accounting? So internal users, firstly, is the owner of the business. Let's say you own a business, you are the user of accounting information. Every day, somebody record the business transaction, and at the end of the year, somebody or accountant will prepare the financial statement. Who will use this financial statement and accounting data? You, the owner of the business. You want to know about your business, you will look at the accounting data information. Managers also will use the accounting data. So manager has a purpose. Okay, different owner have different purpose of using accounting data. Owners of a business, they use accounting data to know whether their investment has good return or not. Manager, he or she will use accounting data. The main purpose of them to use the accounting data is to make business decision. Like I said earlier, if you own a business, you have to make many business decisions, or you manage a business, you have to make many business decisions every day. So managers, most of the time, they use accounting data to help them to make business decisions and to operate the business. Employees, if you are working in a business, you most of the time will want to use accounting information. Most of the time, employees, they use accounting information to make employment decision. For example, let's say you work in a company, and then every year you see the financial statement of the company, and you found that for the past 5 years the company has made losses. 5 straight years, the company has made losses. So what is the employment decision that you will make? You will want to continue to work in the company, or you want to find a job in other places? That's how you use accounting data. That is how employees use accounting data, and they use the data to make employment decision. Obviously, if you work in a company and then you see that the company has made losses for the past 5 years, so the decision that you have to make is to find work in other places, because the future of the company maybe not good. Maybe the company will close down in next several months or something. So the thing that I want to tell you is, these are the 3 internal users. See here, in 3 internal users, and different users have different purpose of using the accounting information. Okay, there are also external users. So the first one is external users. So remember, external users are people outside a business. Customer, for example. Customer is also a user of accounting information. If particularly if the customer want to purchase expensive item. Let's say we make an example. Let's say we are customers. Let's say one person, one day he wants to buy a car, very expensive, $50,000 car. He is a customer. So the good thing to do is, before he buy the car, he has to see the financial statement of the company that produces the car. Why? Because most of the time when you purchase an expensive item like a car, the car will comes with warranty, maybe 5 years warranty. So before you purchase the car, you better check the company that produced the car. Let's say you see the company has made 5 straight years losses, yet the company promised to provide warranty, 5 years warranty for its car. Do you think you will purchase the car? Maybe not, because let's say you purchase the car today, and then after 1 year the company bankrupt, so you cannot claim the warranty anymore, because the warranty is provided by the company. So that's how a customer will use accounting information. A customer is an external user of accounting information. So that's a good idea. So a customer will use accounting information to make purchase decision, to decide whether to purchase the product or not to purchase the product. Like the example that we made earlier, customer want to purchase a $50,000 car. It is very expensive. So before the customer purchase the car, the customer check the financial statement of the company that produced the car. Let's say the company made 5 straight years losses. Then the customer decide he does not want to purchase the car. So that is how a customer use accounting information. Why? Because he want to make purchase decision, where he wants to decide whether to purchase or not to purchase. Creditors. Creditors are parties that give credit to a company. If you have a business or a company, most of the time, businesses, they purchase something from supplier in credit. Okay, so the supplier is a creditor because he or she gives credit. So creditors most of the time also will use accounting information. The creditors will check the financial statement of a business before the creditor give credit. If the creditor sees that if a creditor sees that the business has a lot of cash and asset, so most of the time the creditor will give credit. If the creditor see in the financial statement that the business has insufficient cash, so most of the time the creditor will not give credit. So that's how creditor uses accounting information. They use accounting information to make credit decision, to give credit or not to give credit. Government also uses accounting information. The thing is like this: every year, the government will see if many companies are making profit, good profit, then the government will charge tax. Maybe will increase the tax to get revenue. But if government sees that many businesses are making loss and struggling, so most of the time government will cut the tax, or maybe the government will provide subsidies to businesses. Even now we have also heard that government bail out some companies, help companies to survive. So government most of the time uses financial accounting to make decision about the tax rate. They want to decide about the tax rate, companies corporate tax rate. Okay, so these are about the accounting, the users of accounting information. Okay, this is about the two main branches of accounting. I have told you earlier. In this course, you will learn about two main branches of accounting: financial accounting and management accounting. Okay, let's see. Financial accounting is primarily concerned with the recording and reporting of business data and activities for a business. So, remember this: financial accounting is used to calculate profit for a business. Basically, financial accounting is accounting that you can use to record business transaction and to calculate profit for your business. Management accounting uses both financial accounting and estimated data to aid management in running day-to-day operation and in planning future operation. So and also remember, management accounting is a type of accounting that you can use to help you to manage a business, and also it can be used to calculate costs for the business. Let's say you have a business, and then it is not very easy to manage a business. So you have to know that you can use management accounting to help you to manage the business. And also, if you have a business, you produce something, so you have to know the cost of your product. So management accounting can be used to help you to calculate the cost for the product. So for the first 5 chapters in this course, you will learn about financial accounting. So I will focus now more on the financial accounting. See, this is about the financial accounting and management accounting. So financial accounting, okay, let's see in terms of output. Financial accounting is a process. You have to do it every day at the end of the year or at the end of accounting period. The accounting produce something. The output, there is an output of financial accounting. The output of financial accounting is financial statement. If you want to see an example of financial statement, you just go to website of any company that you like, maybe Alibaba, maybe AirAsia, maybe Petronas, maybe Shell, or anything else, any companies, and you check in their website. Most of the time they will attach their financial statement there. Financial statement is like a book actually. It contains profit and loss account, balance sheet, cash flow statement, and etc. So you can open the financial statement of a company, and then you can see whether the company is making profit or loss, how much is the revenue, how much are the costs. You can see how many assets the business has, how many liabilities are debts, so you can check how many debts they have. You can check how many profit they make. So that is financial accounting. Management accounting is a type of accounting, and also it is a process. At the end of the year, or at the end of the process, there are two main output of management accounting. First, budget. Second is the cost report. Okay, so that is okay. I will cover this in the next lecture. In the next lecture, you will see about the types and forms of business ownership. Remember, our focus now is on financial accounting, so you will learn about how to do accounting record for a business. So before you can do accounting record for a business, you have to know how the type of businesses out there. There are many types of businesses. They are not same, and the way to do accounting record for them also are not same. So that's why one of the first thing that you have to know before you learn about how to do accounting record is to know the type and form of business. Thank you very much. This is the end of this lecture 1. Do not forget to write your name and metric number in the comment section. I will take that as your lecture attendance. And also for the students, so I suggest all of you to subscribe this video channel, this YouTube channel, so that you can see future videos. You will get notification, and also you can watch previous videos. You can also, there are many videos in my YouTube channel, past year lecture, and also several sample exam questions I shared in this video channel, YouTube channel. Thank you very much.